In trading, people talk about scams, fake mentors, and market manipulation. But there's a hidden danger almost no one talks about, a scam so powerful it doesn't just take your money, it takes your mind. And today, I'm going to expose it. You fear scammers, fake signals, and market manipulators. But the most dangerous scam in trading is happening inside your own head. It's called overthinking. It doesn't just steal your money. It steals your time, your confidence, and your ability to act. And that's why overthinking is more dangerous than any trading scam you'll ever face. If this message hit you hard, then remember, trading success starts with mastering your psychology. Don't let overthinking be the scam that destroys your future. Share this video with a trader who needs to hear this, and subscribe for more deep insights into the psychology of trading. Your next breakthrough might be just one mindset shift away. What if I told you that the biggest scam in trading isn't the market at all? It's in your own mind. It's the illusion that if you think more, analyze more, and wait for more confirmation, you'll finally gain control. But the truth is, control is an illusion, and overthinking is the scam that sells it to you. Every trader starts with a simple setup. A chart, maybe one or two indicators, a clear entry and exit plan. But as losses come, doubts begin to creep in. Instead of trusting their system, traders begin adding more layers of analysis. One indicator becomes 2, then 5. One time frame becomes 3. Soon, the chart looks like a Christmas tree of signals. And what happens? Instead of clarity, confusion. One signal says buy, another says sell. News headlines contradict the chart. The trader feels stuck, frozen in indecision. This is the illusion of control. It makes you believe that by adding more information, you're gaining safety. But in reality, you're drowning in noise. The market does not reward the trader who knows the most. It rewards a trader who acts with clarity. Why do traders fall into this trap? The answer lies in psychology. The human brain hates uncertainty. It is wired to seek patterns, to find meaning, to feel safe. In trading, uncertainty is everywhere. No signal is ever 100%. No analysis can predict the future with certainty. So the brain creates a coping mechanism, overthinking. If I add one more indicator, I'll be more certain. If I check one more chart, I'll know for sure. If I wait for one more candle, I'll avoid the loss. It feels responsible. It feels careful. But it's actually avoidance. Overthinking is the brain's way of running from fear. The fear of being wrong. The fear of losing money. On the surface, overthinking seems harmless. But the cost is massive. Time wasted. You spend hours analyzing and still don't act. The market moves without you. Energy drained. Constant thinking burns emotional capital. You feel tired before you even place a trade. Opportunities lost. The perfect setup comes and goes while you're still thinking. Confidence destroyed. Every hesitation creates self-doubt. You no longer trust yourself. A scammer outside may take your money once, but the scam of overthinking steals from you every single day. Time, clarity, and confidence. Look at professional traders. The best of them often use the simplest systems. 1 or 2 indicators. A clear risk-to-reward ratio. Rules they stick to without hesitation. Why? Because simplicity creates action. Complexity creates hesitation. The illusion of control tells you complexity is safety. But in trading, the opposite is true. The simpler your process, the clearer your mind, and the faster your execution. So how do you escape this mental scam? Accept uncertainty. Stop chasing perfection. No trade will ever be 100% safe. Losses are part of the game. Set strict rules. Define your setup, your risk, and your entry/exit conditions. Once those are met, act. No extra analysis. Time box your analysis. Give yourself a fixed window to analyze, then decide. For example, 10 minutes per trade idea. Limit inputs. 2 indicators max. 1 time frame for decision-making. Anything more creates confusion. Journal everything. Write down why you entered or why you hesitated. Over time, you'll see the patterns of your overthinking. Real control in trading doesn't come from predicting the market. It comes from controlling yourself, from having the discipline to stick to your rules, to accept risk, and to act without hesitation. Overthinking gives you a false sense of control. It's comfort without progress. Discipline gives you real control, uncomfortable at first, but powerful in the long run. Picture two traders. The first spends hours analyzing, waits for the perfect entry, and ends up missing it. He feels safe, but empty, stuck in hesitation. The second spots his setup, trusts his rules, and executes. Sometimes he wins, sometimes he loses, but every trade gives him feedback. He grows. Which trader survives in the long run? Not the one who thinks the most, the one who acts with clarity. The illusion of control is the sweetest scam in trading psychology. It whispers, think a little more, wait a little longer, add one more filter, and you'll be safe. But in reality, it robs you of action, of time, and of growth. The market doesn't pay you for thinking. It pays you for clarity and execution. So remember this. Overthinking isn't control. It's a scam. Break free from it with discipline, and you'll finally see the market as it truly is. The greatest danger isn't being scammed by others. It's being scammed by your own mind. Overthinking sells you the illusion of control, but only discipline gives you the power to win. Overthinking in trading is not just a mental habit. It is an emotional drain, a silent thief that slowly steals your energy, your confidence, and eventually your ability to make rational decisions. You might think scams are dangerous because they take your money once. But overthinking? It takes something far more valuable. It takes your mental capital. And once that is gone, no amount of financial capital can save you. Imagine this. You sit down at your trading desk with a plan in mind. You tell yourself you'll wait for the right setup. But as soon as the market opens, your brain begins its chatter. What if this candle is the start of a reversal? What if the news I ignored suddenly matters? What if I'm missing a hidden clue? Instead of calmly observing, you're running marathons inside your mind. By the time a clear opportunity appears, you're already drained, tired, restless, and emotionally spent. This exhaustion is subtle. It doesn't come like a sudden crash. It builds like a slow poison. Each doubt, each overanalysis, each mental replay of what if chips away at your emotional reserves. You don't notice immediately, but over weeks and months, it turns trading into a burden instead of a passion. Why does this matter? Because trading is not just about technical skill. It is about stamina. Not physical stamina, but emotional stamina. The ability to remain calm through chaos. The ability to execute without hesitation. The ability to accept losses without collapsing. Overthinking destroys the stamina. It's like a leak in your fuel tank. You can still drive for a while, but sooner or later, you'll be stranded on the road. Let's talk about the consequences. Decision paralysis. When your mind is consumed with what-if scenarios, you hesitate at the moment of truth. The trade you plan slips away. You freeze not because the market tricked you, but because your emotions are exhausted from endless mental debates. Impulse trading. Ironically, overthinking often leads to impulsive actions. After hours of analysis, when you're emotionally drained, your brain seeks relief by pressing the buy or sell button just to end the torture. You're not trading a plan. You're trading for escape. Emotional volatility. Exhaustion doesn't just make you tired. It makes you fragile. A single losing trade can feel like the end of the world. A minor drawdown feels like a personal attack. Because you're already emotionally depleted, small setbacks hit you like disasters. And here's the real danger. Emotional exhaustion is invisible. If you lose money in a scam, you know exactly what happened. But when overthinking drains you, there's no obvious villain to blame. You turn the blame inward. You say to yourself, maybe I'm not cut out for trading. Maybe I'm just unlucky. Maybe I'll never succeed. That inner voice grows louder with every drained day until you begin to doubt not just your trades, but your identity as a trader. This is why I call emotional exhaustion more dangerous than any scam. A scammer can take your money, but they cannot take your belief in yourself. Overthinking, on the other hand, slowly erodes your confidence until you voluntarily quit, thinking you are the problem. And when that happens, the market doesn't need to beat you. You beat yourself. Now the question is, how you fight this exhaustion. The answer is not to eliminate thinking. Thinking is necessary. The solution is to separate analysis from execution. You analyze when the market is closed, when your mind is calm, when you can build scenarios without pressure. But when the market is live, you execute. No more what if, no more mental debates. Your brain must shift from analysis mode to action mode. Another solution is to build emotional rest into your routine. Just like athletes need recovery days, traders need mental recovery. If you find yourself obsessing over charts 24/7, you are not being diligent. You are exhausting your emotional energy. Step away. Walk. Write. Breathe. Allow your emotions to reset. A clear mind is far more powerful than a cluttered one. And finally, you must remind yourself of this truth. You cannot control the market, but you can control your energy. Emotional capital is as real as financial capital. Once you protect it, you protect your longevity in trading. So next time you catch yourself spiraling into endless what-ifs, pause and ask, am I analyzing the market or am I draining myself dry? Because if you allow overthinking to exhaust you, you've already lost long before you ever place a trade. Remember this. Scams can empty your wallet once. Overthinking empties your soul every single day. And that's why it is far more dangerous. Every successful trader has one hidden weapon that is rarely talked about. It is not a strategy, not a secret indicator, and not some insider knowledge. It is intuition, that inner sense, that quiet voice that tells you when something feels right or when something feels off. It is not magic. It is not guesswork. It is a result of hours, weeks, and years of experience embedded deep into your subconscious mind. But here's the problem. Overthinking kills intuition. Think about it. When you first learned how to drive a car, you were clumsy. You overthought every move. Where's the brake? Am I pressing the accelerator too hard? Should I check the mirror again? But after enough practice, it became automatic. You didn't think about driving. You just drove. That's the power of intuition. It frees your brain from analysis, so you can act naturally. Trading works the same way. The longer you're in the markets, the more patterns, behaviors, and rhythms your subconscious mind picks up. Intuition is not guessing, it's recognition. Your brain connects dots faster than you consciously realize. But when you overthink, you drown that inner voice with noise. You stop trusting your own instincts. You second-guess every move. And eventually, you disconnect from the very edge that could have made you consistent. This is why I say overthinking is not just a waste of time. It's a direct attack on your trading soul. Let me give you a real example. Picture a trader who has studied the market for years. He has seen countless chart patterns. One day, he notices a setup forming. His intuition says, this looks like a strong reversal. But instead of acting, he starts overthinking. Wait, maybe the news will change this. Maybe this is just a trap. Maybe I should wait for another confirmation. By the time he convinces himself, the move has already happened. His intuition was right, but his overthinking strangled it before it could act. Now, here's the irony. When this happens again and again, traders begin to believe they don't have intuition. They say, I can't trust my gut. My gut always betrays me. But the truth is their intuition didn't betray them. They betrayed their intuition. By overthinking, they silenced the one voice that could have guided them. And this is more dangerous than any scam. A scammer can take your money, but they cannot take your edge. When overthinking erodes your intuition, you lose the one advantage no one else can replicate: your unique way of perceiving the market. That loss is far more devastating than a financial setback. Let's break this down deeper. Overthinking creates distrust in yourself. When you constantly doubt your decisions, you train your brain to ignore its instincts. It's like telling yourself over and over, I can't be trusted. Over time, this belief becomes a self-fulfilling prophecy. You hesitate, you freeze, and you convince yourself your intuition is worthless. You become dependent on external voices. When intuition fades, you look outside for answers. You chase news, signals, gurus, and chatroom tips. You stop being a trader and start being a follower. Instead of trusting your own analysis, you outsource your thinking. And that dependency is exactly how scammers prey on traders. Because once you stop trusting yourself, you will trust anyone who sounds confident. Your learning process slows down. Intuition develops when you allow yourself to act, reflect, and learn. Overthinking prevents this cycle. Instead of acting on instinct and learning from feedback, you get stuck in a loop of hesitation. You never give your intuition the chance to grow. It's like a muscle, you weaken it by never using it. So how do you rebuild intuition once overthinking has stolen it? The answer is both simple and difficult. You must practice trusting yourself again. That means taking trades not because you are 100% certain, but because your preparation aligns with your instincts. It means allowing small risks, allowing small mistakes, and treating every outcome as training for your inner edge. You must also learn to separate intuition from impulse. Intuition is quiet, steady, and calm. Impulse is loud, emotional, and urgent. Overthinking often confuses the two. The more you practice listening, the easier it becomes to hear the calm signal beneath the noise. And here's the truth most traders don't want to hear. Intuition will never be perfect. It will sometimes be wrong. But that's not a weakness. It's part of the process. The goal is not to make intuition flawless, but to make it sharper than hesitation. Because hesitation will always cost more than a wrong trade. Think about this. When you ignore your intuition and the trade works out, you feel regret. When you follow your intuition and the trade fails, you still gain experience. But when you follow hesitation, you gain nothing, only exhaustion and frustration. That's the hidden cost of overthinking. So I leave you with this. Scammers can steal your money, but overthinking steals your edge. And without intuition, you're not a trader. You're just a spectator watching opportunities pass you by. Trust your training. Trust your preparation. And most importantly, trust yourself. Because once you lose that trust, no amount of strategies, tools, or signals can save you. Remember this. Intuition is your compass in the chaos of trading. Guard it, protect it, and never let overthinking silence it again.